Hey, everybody. Welcome once again to our Hot Topic Wednesday. I'm Hector Aguilar of Aguilar Realty Group, along with Ben, your agent. And today we have
Hello,
a
everyone.
special guest. Hi, Ben.
Hey, what's up? Hey, everybody.
Today we do have a special guest, our dear friend Jennifer Zamora from Bank of the West. Thank you for being with us today. We have a really interesting topic today, but I want to introduce Jennifer formally. So, Jennifer currently serves as the Vice President of Community Lending and Diverse Markets for Bank of the West, covering Southern California and Nevada markets. In her role, she is actively looking at expanding information about the American dream of homeownership throughout the Southern California area and Nevada markets. Her passion is educating clients on how to build wealth through the importance of planning for the future and leaving a lasting legacy. While Jennifer serves all communities, she has a true passion for educating the underserved Black and Brown community to a brighter future. She is an active partner with Operation Hope, a nonprofit dedicated to disrupting poverty and empowering inclusion for low and moderate income youth and adults. She serves on the board of directors for the Boys and Girls Club and the NAREP Montebello Southeast LA chapter as well. She also completed the Multicultural Women Executive Leadership Program at USC. So, congratulations, Jennifer. Thank you for making
Thank
some
you.
time to be with us.
Of
I,
course.
I certainly appreciate it. Today's topic, as most know, is if you're buying a home in this market, the market has shifted to favor buyers. And what do I mean by that, right? We're starting to see a lot more inventory hit the market. We're also seeing that homes are sitting a little bit longer on the market. They're sitting maybe instead of selling in 2 or 3 days, now they're selling in 14 to 21 days. And they're receiving a lot less offers. So there's more opportunity for you as a buyer to make offers on properties currently because you have more choices and less competition.
Yeah.
But the inevitable problem that most buyers have when wanting to buy a house is their ability to save for their down payment and closing costs. So I met Jennifer at a business mixer in the city of Whittier, and I was really intrigued by what she does for Bank of the West. Not only for Bank of the West, but as the vice president of community lending, she's very knowledgeable in different down payment assistance programs that are offered throughout the state, our local counties, and in some local cities. So, Jennifer, with that said, let's go ahead and get started. Tell us a little about yourself. And again, thank you, Jennifer, for being with us today.
Perfect. Well, thank you. Thank you so much for having me. Well, you did a great job with the intro. Thank
Oh,
you.
thank
I just on top of that, I've been in banking for the last 17 years, and I got into banking because I wanted to serve the community. I wanted to make sure to educate, answer all of the questions. So, I have done everything that you can think of on the retail banking side, and I
you.
landed on my feet on the mortgage side about 9 years ago. So, I
Okay.
love doing mortgage, getting people into homes. I think the biggest highlight of my career that I love to share with everyone is that 2 years ago, I was
Mhm.
able to help with $750,000 in down payment assistance to families.
Wow.
Yes, in one
Wow.
year. So it was great. It
That's
was great
awesome.
to assist those families. We did layers. It was a headache, but we got so many wonderful people into their first homes.
And it's one of the interesting things about that is that you mentioned that you did that over the last 2 years. And if you guys remember in the market, we were all, fighting for properties. It was more of a seller's market. So to,
Yeah.
to have that accolade of being able to place close to $750,000 in down payment assistance funding,
Wow.
that's an amazing accolade. So congratulations on that.
That's
Thank
awesome.
you. Thank you.
Much like yourself, I started in the real estate industry as a mortgage banker. I was a mortgage banker loan officer for 8 years. And in 2000, I transitioned from mortgages to real estate. So I have a very good background in terms of understanding how the mortgage business works. And it gives us an opportunity to consult with our clients a little deeper than most agents. So it's a good background to have. And I'm glad that I had the opportunity to also be a mortgage banker. So I've enjoyed serving my residential community now for the last 22 years. So it's been fun, but mortgage was definitely the highlight of or how I started in the real estate industry.
That's amazing. That's great to hear. And it's great that you're still around, right? You went through
Correct.
everything. Well, seven.
Absolutely. Absolutely. I kind
That's
of
amazing.
survived the up and downs. We survived the market crash or recession of 2008. It was tough. I had to bite my pride a little bit in terms of my business. I did stay in real estate business, but I did have to find a full-time job to survive during those thin years. But you do what you have to, and those years definitely served a purpose in terms of the experience and also being able to provide guidance to those that really needed it at the time, that needed to short sell or that needed loan modification help. So, you appreciate those downtimes because you're able to learn other skills and be able to help people still. So it was great. I've gone through a few ups and downs, but and I have survived. So that says a lot, and I'm grateful to God for the opportunity to do so. So thank you for that. So
Yeah.
today's topic is down payment assistance, right? And
Yes.
I know that there's thousands of dollars available through down payment assistance programs that are not only like CalHAFA or other maybe well-known down payment assistance programs. So share with us a little bit about those programs. One of the ones that you asked me to highlight is a program called WISH. And I got to be honest with you, this is the first time I hear a WISH. So
Oh my goodness. Wish is my favorite program. So if with a lot of the groups that I participated in, if they ever share a video, you'll see me highlighted with the Wish program because
all
I just
right.
love it. It is a grant that is provided by the Federal Home Loan Bank of San Francisco. Okay. So grant, what does that mean? It is
A gift.
a gift. It
Yep.
is given. Okay.
Yeah.
So what I love about this one is that it is you have to stay in the home for 5 years, but again,
Okay.
it is a grant. It is forgivable. They give you up to $22,000. So they match you a 4-to-1, and every year a little bit of that is forgiven. Okay. It
Okay.
is for you to buy your primary residence, so you have to live in it. For most of the programs, you're gonna see you do have to do a home buyer course. So it's an 8-hour HUD approved course. Okay.
Okay.
For most of these, so there's a lot of programs out there that you can actually jump on. There's online. There's programs that you can go to. I offer a free one with Operation Hope, which I love to do. So yes, most of these. Again, 4-to-1 match. There's no minimum FICO for the this program. Okay.
No minimum FICO. Wow.
So the FICO is going to be driven by the lender, right? Whoever's going to use this. So no minimum FICO for the program.
Okay.
And it can be used with any program, conforming, FHA, VA, you name it. They can layer.
They can use the WISH. Now, is the WISH for closing costs, or is it for down payment, or how can they allocate those funds?
Either way, either one.
Can it be a combination of both, down payment and? Okay. Yes. Wonderful.
Yes.
And I guess the question of the day is: does WISH program have an income limitation? Because that's mostly. Okay, so it does have an income limitation.
It does, and it's going to depend on the county because it's good all through California, right? So depending on the county that you're purchasing it, it will tell you the difference. And it's actually, so this program itself goes by household income and the number of people in your household. So
number of households.
If you have 6 people, obviously the income goes up, right? So there's ways around it.
And just to clarify, Jennifer, those 6 people, is it 6 adults or is it like a household family? 4 kids, 2 parents, 6 family members. Wonderful. Wonderful. I think a lot of times there's some challenges in income limitations because of how the program sees that income, right? Some only allow the 2 breadwinners, some do allow group of households. So that's very good. What else can you tell us about the WISH program?
So that I pretty much covered everything that you need on it. It's an easy grant program. I think it's one of the easiest ones out there. That's why it's my favorite. You have a lot of different nonprofits out there that will help with guiding you and looking at the income, and the bank, the mortgage banker will help you with it as well. And you must be a first-time home buyer.
Okay, so I have a question for you. How do they apply for that program? Is that a program that the loan officer they're working with? Hey, say I want to see if I qualify for WISH, or do you have to go to a specific department first to get it and then go to a loan officer? How does that work?
So with WISH, I always tell I always with all my homebuyer seminars, I tell the client to be their own advocate, right? To do a little bit of homework themselves.
Right.
About the program now. You can definitely ask your loan officer if they work with it, but some of them are not approved, right? So I would go to the website, which I'm going to give to you now. I'm ready if you guys are ready. www, and we'll add this right in the notes. FHLBSF, so Federal Home Loan Bank San Francisco .com.
Okay.
And you're going to look for WISH. And what they'll do is they'll have a list of their approved lenders there.
Let me go ahead and put that in the chat here real quick so that people have it. Now, bsf.org. Okay, we're going to go ahead and show that. So here's the website,
perfect.
FHALBSF.org, and then you hit apply, right?
Yes.
Wonderful. Did I get the letters right?
.com.
Oh, sorry. Let me go ahead and correct that. It's not .org.
It's okay.
.com. .com. You know, because it's a bank, I thought it was an organization. But thank you for clarifying that. Let's go ahead and show that again. And that way the folks can write that down, fhlbsf.com, and then look for the WISH program.
And again, it's a 4-to-1 match. So the minimum that the client needs to bring in is $5,500. So combine that with your $22,000 that you're going to be getting. Already we're at $27,500. We're already in a plus there.
That is awesome, because there are, you know, this, for example, go ahead, Ben. What's your question?
Well, because I'm new at this, so I don't know what a 4-to-1 match is. Can you guys explain what 4-to-1 match is?
Oh, of course. So for every dollar, they provide 4. So it's 4 to 1. So if you bring in $1, they're going to give you $4.
Right. So just a simple math, Ben. Like if you bring in $5, they'll match it with $20. Right? 4-to-1 match. So that's why she was saying that the borrower would only need to come in with $5,500 for them to qualify to receive their maximum of $22,000 used for down payment and closing costs.
Got it.
That's really a good amount when you combine it to $27,500 between what they're bringing in and what WISH provides them. That's awesome, because, you know, I know, for example, in the San Bernardino County, like Montclair, Ontario, maybe Pomona, maybe like, you know, Rialto and Fontana, you know, you still can buy with FHA with that amount of money, which is fantastic, right?
Yeah.
And then if you're a veteran, you can use that with your VA program. That's a no down payment program. You can use all of those funds to pay for your closing costs, right? So, and just a side note, most people don't know that you can actually exceed the loan limits with VA. And if you guys want additional information about that, reach out to me. You can DM me or text me, and I'll break that down for you. But yeah, you can go above the loan limit. So there's a formula for that. And I'll say it quickly. It's basically you have to bring in 25% of the difference of that loan amount. So for example, if the loan limit, what's the loan limit for FHA VA, Jennifer, in LA County?
Oh, that's a great question. I apologize. I don't have that in front of me. I don't do loans anymore.
Is it next to you, Victor?
You know what? I thought I had it next to me, but I don't. I don't see it. Oh, here it is. It's
right there.
Yeah, it's apparently it's for loan limits. It's gonna be, let's see. Well, those are conventional. I have to look, but anyway, the difference. Let's say the limit is, I think, 800,000. Let's say, right, and you go over that on a VA at 900,000. Basically, you only have to bring in as a buyer 25% down of that $100,000 difference. So most buyers don't know that you can still use your VA. You can exceed that program. I put one of my clients who is a veteran and is also a LA County Sheriff deputy. I put him in a home here in Hacienda Heights many years ago, and I exceeded the loan limit by like $300,000, and so he was able to buy it with VA. So, you know, we can go into more detail with VA. We'll actually schedule a VA specialist to come and talk to us. But let's move on. Let's move on with our down payment assistance program. But the WISH program seems to be like a really good program, Jennifer. Thank you.
Please let me know when you hold that VA. I will be watching.
Yeah, we'll definitely get a VA specialist to talk to us about those programs, because I think it's good information, and a lot of maybe VA veterans that are looking to buy aren't aware of that. So we'll bring that to you, okay?
Yeah.
All right, let's talk about the next program here, which is Landed. And I did a little bit of research.
By the way, the VA loan limit in LA County is $970,000.
Thank you, Ben, for looking that up. I have that here posted on my wall, but since on the recording, I can't really find it right now. Right? It's what is it? When you need it, you can't find it, but when you don't need it, it's there. Right. So let's talk a little bit about the Landed program. I know that Jennifer shared with me that there's $120,000 available for teachers, county workers, and first responders. So tell us a little bit more about the Landed program.
This is one that I love. So it's throughout all of California. Okay. So Landed, again, will give you one of two, 10% or up to $120,000 of your of the purchase price.
Okay. So either or, 10% or.
Maximum is 10%.
Correct.
Okay.
So if your 10% is only at 90,000, then they'll just go up to a max of 90. But the maximum for the loan is going to be 120. I mean, the maximum for this is 120. Now, you heard me say loan. So this is not a grant. You have to pay this back.
Got it.
Okay.
What I like about it is that they don't charge you interest on the money that you're borrowing. So you don't get interest on 120, but you do have to share your appreciation.
So it's like a shared equity program.
Correct.
Okay. And what is that percentage of sharing?
3.5.
Okay, that's not too bad.
Not bad.
Not bad at
So
all. I mean, I've heard of other
Three and
programs
a
that
half?
offer like
3.5?
3.5%.
0.5. Yeah.
So that what that means, and that just increased not too long ago. So what that means is if you buy a home today, Ben, at 500,000, and that increases to 600,000 tomorrow, and let's just say you're going to sell it or refinance it, you can pay this 120, right?
Yeah.
You'll have to pay 3.5% of that 100,000 in equity that it increased.
Thank
Right.
you. Yeah. That's good.
Which in that particular example would be about $3,500. Not bad at all, honestly, to get $100,000, guys. That's amazing.
Yes.
Yeah. Why not?
Yes. Now, if you guys wait 10 years and that increases by 2 or 3 or
That's,
400,000, now
yeah.
you pay back 120 plus the shared appreciation. So it gets a little, yeah.
It'll increase, but well worth the 3.5% if it allows you to buy a property, maybe a little bit higher priced, that's a little larger, maybe serve your needs a little bit better. So still a great program, up to $120,000. Are there any limitations or income limitations?
So this one does have income limitations, but it goes up to 150% of the minimum income.
Median income.
Median income. So most programs are going to be 80% or lower, right? So Wish is 80% or lower. This goes up to 150%. So I love it. So it's really out there but it doesn't have the limitations of you have to be an educator, healthcare, or a government employee. So this is why they make it up to 150% of that.
And this is a state program, correct?
That's correct.
Okay, so it could be in any county that they buy.
That's correct.
Awesome.
And that actually was just when it started, it was only in about 4 or 5 counties.
Okay.
And it started about 4 or 5 years ago. So now it has grown and you can use it anywhere. I wanted to use it in Fresno. Again, I cover Fresno. And I was like, oh my goodness, I don't think I can from reading the guidelines. And then I just emailed them and they were like, yes, it's open to anywhere in California.
Wow, that's great. So you can
they might have some certain limitations, maybe a smaller, but from what he discussed, we can do pretty much everywhere.
Fantastic. I know, Ben, you had a question.
Sorry.
Have you guys seen the shared equity percentage increase or decrease lately? Or has it been pretty average?
It's increased. It's definitely increased in the last probably 6 to 9 months in most programs. It definitely has increased.
Okay. What is the normal equity share percentage that you see in different DPA programs?
It really depends. Each one is very different. It really depends on the program itself.
Okay.
Some are 1.5. Landed was I believe 2.5 for a very long time, and then it increased to 3.5. It just, since the values are now starting to stabilize and go down a little bit, this is why they're making sure that their investors are going to have a little bit of profit
benefit from that. Okay, fantastic.
One last question. Sorry.
Please.
What affects the shared equity to go up?
Like I just said, depending on where the
market is.
So we don't see it go up quite often, but again, this money that these different programs have are investors that are putting their money in for it to be loaned out. So we want to make sure that the companies want to make sure that they're getting a benefit and a profit.
Got it. Okay. Sorry.
And just like last question with the Wish program is, how do we guide our buyer clients to see if they qualify for Landed? Is that something that they tell their loan officer, or do we have to go to a specific website?
No. So Landed has even a smaller pool. I believe only 6 or 7 of us banks are approved with Landed.
Okay.
So your first stop would probably be me or somebody at Bank of the West.
Okay.
But your second stop will be, not ready for it, I'm going to give you the website.
Okay, let me go ahead and create it. Go ahead.
Okay, it's www.landed.com.
Super simple.
Yes.
Awesome.
All right, so for that program, here is the website. Super easy, www.landed.com. Do some additional research and we get you started with that program so that you can apply for it.
And I'm actually looking at the website now. It's very easy. It'll let you know how you can qualify. It will explain the shared appreciation. It will just give you everything. And again, if your loan officer doesn't know about the program, you can go on there and go to one of the approved lenders if this is something that will benefit you.
Wonderful. Well, thank you for that. The landed program seems like an amazing program. My sister is actually a medical worker. She works as a first responder for Kaiser. So I'm assuming like nurses, doctors, LVNs, anyone in the medical industry, even EMTs, firefighters, police officers, and teachers, educators. Like if you're a superintendent, a principal, or anyone in the education industry could probably qualify for this program.
I'm looking at the list, and you have school counselors, hospital administrators, physician's assistants, teachers, municipal employees. It's a big list,
Awesome.
which only in the last 2 years was expanded. It was only for education when they started.
Wow. Well, that's just a big plus. This is an awesome plus because you have a lot of people that are first responders that do want to buy houses, and they can take advantage of this loan program. And keep in mind, it is a loan program, but hey, it's up to 120,000 or 10%, whatever's lesser, and it's money that's available for you for down payment or closing costs.
And the great one about this one, you don't have to be a first-time home buyer. You just have to be buying a primary residence.
Wonderful. So if you've owned a home in the past, or let's say you want to move up to another home, right? You want to keep that as a rental, maybe move up to another one. You're going to occupy that as a principal residence. You can still qualify for the landed program.
That's correct. Here's
awesome.
The other that I missed on my notes. 10%. You have to put 10% down.
Okay.
So 10% down. Client, 10% from landed, and then 80% from your first mortgage.
So it's what we would call in the industry an 80-10-10, right? 80%.
We wouldn't because it's not a home equity line, but kind of because you still have to pay it back, and there is some shared equity. So yes.
So for clients, you're absolutely right. So for clients, it would be 80% their main mortgage company, whether it's Bank of the West or any lender they want to work with. It would be 10% down of your own down payment, and then up to 10% through landed as well. So that becomes an 80-10-10 in the non-traditional way. So thank you for clarifying.
And they do have a minimum FICO, 620.
620, that's still not bad. I mean, most people that I'm running into are in the 640, 660. So 620 is amazing.
Yes.
Wonderful. Well, thanks for sharing that with us.
Yay.
All right, the next program we want to talk about, and we also found this out a couple of weeks ago. Ben and I went to a training with the Veterans Association of Real Estate Professionals, VRAPE, which we are members of. Put a little webinar together and shared with us this Santa Ana, the city of Santa Ana offers up to $120,000 of down payment assistance programs. Can you please share with us how that works and what the limitations might be?
Yes, of course. I love this program. Thank you for actually, I didn't know this program. I said we don't work with this one just yet, but I will. So the borrower must have at least 3% down.
Okay.
There is 0% on this. Okay. You don't charge interest. On the 120,000, you do not charge interest. They do not charge you interest.
Is it a grant or is it a loan?
It's a loan. It's a loan.
Okay.
Yes. Okay. You will have shared appreciation there. No shared appreciation.
All right. No shared appreciation.
Is it forgivable? It's not forgivable. Not all of it. I'm going to get to that one. It is not forgivable because it is a loan. You do have to pay that back.
Okay.
You have 45 years to pay this back. So from the term of affordability, you have 45 years to pay it back.
Okay.
So here's the forgivable portion. 40,000 of it is forgivable for a student that graduated from a Santa Ana high school and has a 4-year college degree.
Wow. So, what a great incentive to promote higher education.
So 10,000 of it.
Santa Ana too.
every 10,000 of it goes by 5 years. So every 5 years, another 10,000 will come off. Another 10. So it is forgivable. Mm-hmm.
Okay. So if you're a graduate of a Santa Ana City School, high school, and you have a 4-year degree, obviously you provide landed the proof that you've completed your higher education, and they'll forgive 40,000 and then an additional $10,000 per year through the lifetime of the loan, or for how long?
It's 40,000 altogether, but total. They do it in $10,000 increments.
I'm glad we clarified that. So they do $10,000 per year up to $40,000.
Right, every 5 years. Every 5 years. So 10,000 the first 5 years. Yeah. So it takes 20 years to get the full 40.
Wonderful. So it's not yearly, it's every 5 years. Great point. what else about the city of Santa Ana's $120,000 loan program do they need?
They do have a preference. A preference is given to veterans and applicants who live or work in the city of Santa Ana. So you don't have to do that, but they will give your application preference.
Okay, now here's the question of the day. Does the property they're buying have to be in the city of Santa Ana?
Yes.
Correct.
Yes. Yes.
I know the answer to that one, but I wanted to put it out there because it was something that you didn't mention, and most people are going to ask, do I have to buy in Santa Ana? So the answer
that's a really great question. Yes, and here's another thing that I give everybody, Hector. Every time that I do a down payment assistance seminar or a home buyer seminar, I always tell them, in the city that you want to live in, right? So this is Santa Ana. Let's just say you want to live in Whittier. Google their website, because they might have a program that is for that city, right? And they will tell you what banks are approved with that, because they will not approve every bank. So if you go to if you go into Bank of the West and you say, hey, Jennifer, in Whittier, they have this program, we might not be approved for that program, but we'll guide you and tell you, no, you have to go here. But Google, we have it at our fingertips. Educate yourself.
Well, part of the reason that we like putting these Hot Topic Wednesdays together is to educate our audience and to bring new knowledge to them that they may not be aware of. Now, my client, no, it's not. My client, I helped a few years ago, maybe 3 or 4 years ago. He's actually my nephew. We helped him get $100,000 from the city of Pomona as a down payment assistance program. So he put, I want to say it was FHA, so it was 3.5%. So that $100,000 covered some closing costs, and he was able to buy a little bit more home versus, because at the time I think he only qualified for $450, and that extra $100,000 helped him qualify for $550, which got him a nice 3-bedroom, 2-bath home for him, his wife, and his 2 kids. So you may not think that $100,000 makes a big difference, but look, if it's available and you qualify, by all means, apply, right? What's the worst they can say is no, right? Yeah. And then you go back to square one, but you never know. You might qualify for it, and you don't want to miss out on thousands of dollars. And like I said, right now is a wonderful opportunity for buyers that are kind of sitting on the fence. Hey, should I buy? Should I not buy? What are the rates going to do? Look, the rates are the rates, right? Traditionally, historically, I've been in the business 30 years. Historically, they've been around 7 or 8% in the time that I've been in the market. So really between 5 to 6%, the interest is still low with people. But hey, the rents are still going up.
Yes, they are.
They are. For example, as a point of reference, I just leased a property out in the city of Pomona, a 4-bedroom, 2-bath. It was just under 1,700 square feet. I leased it for $3,000, right? So that's a lot of money. Why not try to qualify to see if you can get approved for a first-time buyer program or a down payment assistance program? We know that the city of Santa Ana, you don't have to be, or was it the landed that didn't have to be a first-time buyer? Mm-hmm. But there's programs out there, and it's absolutely amazing to know that there's some great programs out there that can help you buy maybe a little bit more home. So, hey, let's do some research. We can help guide you there.
And I love to do this. So you gave me that number, and I'm a numbers girl, okay, all the time. So that $3,000 is $36,000 that your renter is adding value to the owner of that property. And in 5 years, that is $180,000 that they have. That's
$180,000 that you could actually build equity in your own property, pay it down, and take some tax advantages, because as most people know, is you can take a mortgage deduction, interest deduction on your taxes, giving you a larger tax refund.
Yes.
And you're building equity for yourself. You don't have to pay your now, there's some people that can't buy, but at least talk to us, give us a call. We'll do a buyer consultation. We'll pre-qualify you and put together a game plan. If it's not this year, if it's not 6 months, it could be a year. If it's not a year, it could be 2 years. But at least you have a game plan in place to be able to think of, hey, I'm going to buy a house in another 12 months, another 18 months, and I know there's programs out there for me. So,
you have to have a goal in mind. You have to have a goal. When I was going to buy my first house, I put a house on the fridge, and that was you have to have a goal. And I bought a house.
That's your goal. That's right. You have to have a goal. So the city of Santa Ana's program is pretty amazing. I know that the city of Santa Ana offers some really nice housing communities. So there's some good choices there. So that's a great program. Let's move on to the next program.
Yes.
The next program that you wanted to share with us is a program called MIPA.
Okay, so some people say MIPA. I like to say MIPA.
Okay.
But this is with the city of Los Angeles. I
Okay.
really like this program. This is their moderate. They also have one that's LIPA for the low income, but this is this will kind of hit our clients that are trying to buy in because of where home costs are right now. This is
Right.
pretty much where it's going to be. So MIPA gives you up to $115,000 in down payment assistance. The client must contribute at least 1% of the home value.
Okay.
Must occupy as a personal residence. 0% interest, but they do have shared appreciation.
Okay.
And I
How much
want
is
to
the shared
say
appreciation?
I have it up. Give me 1 second. I want to.
What did she say right before personal resident? It has to be a personal residence, and then what did she?
She said that they have to contribute at least 1% of the purchase price towards the down payment.
Purchase price. Okay.
The website didn't have the rate up on what the shared appreciation, so I'm guessing it probably has to do with the income, the household income.
Does MIPA have income limitations?
They do. So with this program itself on the 115,000, it's going to be 81% to 120%
So there's
of
a
the
range.
average median income.
Okay. And that is household income, or is that going to be the two main breadwinners?
It's going to be the main breadwinners.
Okay. And do they allow multiple household members, or they consider those in that bracket or not?
From what I looked at on here, and again, I don't work with this program, but I wanted to do the research. I did not see that it's not households. It's
Okay,
not
so
per household unit.
So it's going to be mainly the two breadwinners.
Correct.
Okay.
And if we have to send an update, I will, but I didn't. Oh, actually, no. It's going to be household size.
Awesome. Household size.
So if you're going to buy,
let's explain a little bit why household size is important. Can you explain why that is important?
Yes, of course. So the average median income takes the average of the area that you're in, right? Everybody that's winning. So this person could be winning 50,000. This was going to be 150, right? But in that area, it's going to take the average income for the whole area. That's just for the household. So it doesn't matter if you have 1, 2, 3, 4, 5 people. This is the average median income. That's what they're going to take. Some of the programs, that's it. Other programs like this one, so I'm glad that you asked the question, Hector. This one, it'll take a household income for one person and then increase it for 2 people, increase it if you have 3 people in the household, increase it if you have 4 people. So so this one for the Los Angeles city, if you have a household of 1 at 120% AMI, you're at 100,050. You can't, for that one person household, you can't make more than 100,050. Now let's just say you have, me and my husband and our 2 kids. So now we're a household of 4. Well, now with the household of 4, we can't make over 142,900 between the 2 of us. If we make under that, we still qualify for the program.
I just did the quick numbers. I'm a numbers person too, right? So you said for 4 people, it was 142,900 max in household income with income limitation for this particular program. That's an average income of about $11,000 a month. That's amazing, because if you take 35% of that to kind of calculate what your housing payment can be, that is going to be, let's see, 11,300 times 35%. That's going to be a mortgage of $4,000 a month. And honestly, you can buy a house in the city of LA for $4,000 a month. I just helped one of my clients close on a deal right there on Martin Luther King Boulevard and Central. Really nice home, completely remodeled, new everything, windows, appliances, move-in ready, turnkey. And his payment was like $3,300 a month. So it was pretty awesome. Now, he wasn't aware of this program, but just so that you know, and the price point for that home was $650,000. So you are able to buy homes in the city of LA. And imagine if you actually apply for the MIPA program and get an additional up to $115,000 for available down payment. Wow, that just opens up another level of pricing for you that you might be able to stay in the city of Los Angeles. Now, for my client, it was important to stay there because he works in downtown, and his fiance, she works for the Staples Center. So commute was absolutely important for them. So again, super important.
Yes. And I was going to say, they probably would have been able to buy something a little bit bigger if they would have known about this program, right? So we would have been able to get them a little bit. You would have got them a little more bang for their buck.
And I wasn't aware of this program, so this is one of the reasons why we want to bring this information to you, because I personally didn't know about MIPA, and it takes someone like Jennifer, who's the Community Lending and Diverse Markets Vice President, to give us that information, and that's really her role, is to share those programs with us so that we can share those with our clients. So thank you for that.
Yes.
Has to be a first-time home buyer?
I'm sorry?
First-time home buyer?
For this one, you do have to be first-time home buyers who have not had ownership interest in real estate in the last 3 years.
Perfect. Okay. So one other question I had, and I know we haven't asked this, but I'm assuming that all these down payment assistance programs are primarily for single-family homes, or do they allow maybe 2 to 4 units?
Oh. No, some of them. So most of them are going to be for primary. Okay. I mean, for single family. Okay, single family condo or townhouse.
Townhome. Okay.
Okay. Most of them, but there are some of these programs that you can use since you're for multi-unit. You can use it to have a duplex or a fourplex. Some of these programs you can. You just have to again do a little bit more of the research, or just go to the expert, the subject matter expert for that program, and that way they can explain to you if you can or you cannot. Wonderful. This one for Los Angeles has to be a single family.
Okay, fantastic. Well, still, hey, that's a $115,000 loan that you can use for down payment and closing costs.
Great. And
all you have to come in with is 1% of your purchase price. What does that mean? So if you buy a house for $700,000, that means that you only come in with $7,000, period. You can borrow a loan from MIPA, from the city of Los Angeles, for the difference of down payment and closing costs. I mean, what more do you want? I mean, there's so many opportunities here to buy a house.
7,000 plus the 115, you're looking at $122,000. And if you layer that with Wish, because Wish can be layered since it's a grant, now we have another 22,000. And we're going to talk about one last program that we can layer as well.
Wonderful. So now we're going to transition.
$144,000, just so you know.
$144,000. Imagine. That's amazing. So
I'll be calling you soon.
Yes, call me.
Call us.
So, obviously you're the Community Lending and Diverse Markets Vice President for Bank of the West. And you've shared with us not only programs that are available through Bank of the West, but also through other cities and counties. And I really appreciate that, because it's about bringing more value to our customers and to our audience. But obviously there's a program that you do as well through Bank of the West that offers an additional $10,500. Tell us a little bit about how that program works, and can it be combined with any of the other programs?
So we are so excited. We just rolled this out. We're going into week 3 today. Yes, week 3 this week that we rolled this program out. So it's $10,500 that we will help you with towards closing costs or down payment. And there's a lender credit. Okay, lender credit, which means you don't have to pay it back. It is not something that is, it's not even a grant where it'll be on the, on the deed or anything. It's just a lender credit, $10,500.
Wow, that's awesome.
You can layer this with any other program. So like I said, we already layered your 7,000 that you brought, plus the 115, plus the 22 with Wish, and now we're going to layer on top of that $10,500. We are at $154,500.
Wow. Listen closely.
I did those.
Wow, that's awesome. That's how you got to that $750,000 in the last couple of years.
We layered, but that was the only way that we were going to get these veterans into homes. So it was really, really rewarding at the end of the day.
Oh, absolutely. I mean, there's so much power in home ownership, right?
Yes.
Financial stability. You're building a legacy for your family and your future. It's the probably best way to build wealth is through real estate. If we look at all the mega, billionaires in the market, Grant Cardone, Warren Buffett, many of them have built their real estate or their financial empires through real estate, through either owning apartments or single families. But it gives just, you and I, the normal blue collar worker, the opportunity to do that for their families and not have to pay rent, pay your own rent. And there's programs, up to $140,000 of layered programs that you can use as your down payment and for closing costs. Some of them are loans, yes. Some of them are grants. Those are great because you don't have to pay them back. And look, in this particular case, they're offering a lender credit of $10,500 to go towards your closing costs or down payment, on top of maybe MIPA, $115,000, or landed if you're a teacher, or even wish of $22,000. So there's so many opportunities. But here's the key. You have to call us. You have to text us. You have to get on our calendar. Let's have a buyer consultation and talk about maybe the different programs that you might be able to qualify for. So
Yeah.
I'm really, really grateful that you had the opportunity to be with us. We got a comment from, looks like, I want to share this really quick. It looks like Lejerie Noguchi is really grateful about the information. She says, awesome info on Facebook. We did have a question from Judith Rosenberg. She says, is the WISH and DPA program for California only, or does it pertain to other states?
So a lot of the ones that we covered are going to be California only, right? Santa Ana's in California, things like that, and
Yes.
WISH is in California. But there are many programs in other states.
Correct.
Many programs. So
it's all about doing a little bit of research, right?
Yes. Again, Bank of the West, we're in a few different states. This lender credit for us right now, since it's a pilot, it is only in Los Angeles and Orange County. But I know that we have it in Albuquerque and so different states as well. So just reach out and do a little bit of just do a little research, or again, give us a call and we can guide you.
Right. So that was a great question. Thank you, Judith, for making that question.
Thank you.
Once again, look, I'm really grateful for Jennifer for being with us today and for sharing some of the down payment programs that are available to us, to buyers that are currently in the market. There's a lot of programs out there available. All it takes for you is to give us a call, set an appointment with us. We'll do a buyer consultation with you, and we'll tie in. Look, it doesn't have to be Jennifer. If you're already working with the mortgage company, maybe we can still guide you and help you get the WISH loan, or we can help you maybe get the landed loan, right? If you want to get an additional credit, yeah, we can definitely consult with Jennifer and get her to help you, give you a $10,500 lender credit. But many lenders can help you that way too.
100%.
So there's a lot of great programs. You don't have to be tied into one lender specifically, but I'm really grateful to Jennifer for bringing this information to us. And we'll definitely bring some additional value added content. One of the ones that I do want to bring to us is maybe a VA underwriter specialist who can share some VA knowledge with us in terms of loan programs and some of those down payment differences. And if there's any questions you might have, or if you have additional needs or something that you want to learn, please go ahead and make sure to like us on Facebook, hit the reminder button, and make a comment. And we'll be sure to bring you more additional valuable content every Wednesday on our Hot Topic Wednesday of the week.
Yes.
Once again, I'm grateful for spending time with you, Jennifer. Thanks for all that wonderful insight and information. Is there anything else that you want to close out with?
No, I just want to, again, just if you're, ask your lenders, don't leave money on the table, because so many buyers leave money on the table. Ask your lenders, ask the questions, do some research, ask your realtor, right? If they know of any additional programs, because if you don't ask, sometimes they won't tell, they don't know that you need it. So definitely ask the question.
And in closing, look, if you have a realtor that isn't aware of those programs, we're here for you.
Hello.
Aguilar Realty Group, powered by EXP, and we'd love to help you. So Jennifer, what a great time we had together. Thank you for spending the time with us.
Thank you. Of course.
Seeing each other in the next Commerce or Chamber of Commerce meetings in Whittier.
Yes.
All right, I'll talk to you soon.
Thank you.
Thank you, everyone. Thanks for joining us. Please make sure to stay tuned for next week's Wednesday Hot Topic. I'm Hector Aguilar, along with Ben, your agent with Aguilar Realty Group. We'll see you next week. Take care.
Bye, everyone.